Okay, recording this video on Sunday, the 22nd of September 2024, just gone 3:51 AM Chicago time. Do hope you are doing well. So it's the weekend and time for another weekend futures market recap, where I go through 15 of the largest futures markets and I show you what I am seeing on my charts. Do hope you had a good week's trading. It was super volatile midweek, as usual, with a Fed announcement. Bit of a surprise, 50 basis points cut. And we've rallied out of that and ended the week relatively strong. So I'll show you what I'm seeing on the Emini charts first, then we'll go to the tick bar charts for the futures markets. But just want to follow up on a housekeeping note from last weekend. Last weekend I was talking about, has TradeStation changed their logic for calculating their continuous contracts with changes in the rollover dates? Got a message back from TradeStation, their data integrity team. They didn't really clarify for me what has actually changed, but you will notice on the charts that I show you this weekend that my chart settings have changed for a whole bunch of different markets, particularly the Emini markets. You used to see this chart, it had at es.d equals 106xc, and the 106xc meant that in constructing the continuous contract we were using the sixth day before expiry for the rollover. That's no longer necessary. Data in TradeStation now seems to be correct, and the at es.d and at es contracts seem to be showing us the most amount of data. So that's all good. It's a simplification. If you are interested in the details, I might do a video this week, but to be honest, we're down in the weeds with something that's really a little bit trivial. If you are a subscriber to the Better Indicators, the chart settings other markets spreadsheet now has these correct continuous contracts that I'll be using, and it also shows you the symbol changes that we've made in the last couple of days. So a few of these have changed, and I'll show you the reason. It's all for the good. It's made things easier using the TradeStation platform. If anybody's interested in the details of that, please let me know in the comments, and I'll do an additional video on this. So let's talk about the daily chart of the Emini first. And we are in an uptrend, continue to be in an uptrend. Background's in red, which means we're in an uptrend in terms of price and volume, and we're rallying up. We got very close to this 5,800 level. I think the high during the day was 57.97.5, so 2.5 points away. And we're just looking for that breakout to new highs. So the momentum at the moment is not great, but in terms of professional and amateur bars, we've got nothing at the highs. We're going to be looking this week for some cyclical resistance to come in. You can see here we've got the two cyclical turns on better sine wave, the lowest time frame, which is the very thin lines, and then the slightly thicker lines here on the intermediate time frames. Both of these reached plus 100 type levels, and they're looking to cross in the next few days. So we'll see when that goes off. We need price weakness to confirm that there is a cyclical resistance coming in, but that's going to be due, I would imagine, this week, so it'll be interesting to see what happens there. But in terms of average trade size and momentum, yeah, we're weak on momentum, but we've not got any signals in terms of average trade size at these highs to say that we're going to weaken and this is topped out as yet. So 135-minute chart, again, same thing. Background's in red. We're in an uptrend in terms of price and volume. We've got a nice sign of strength down here. Gone off this week. Those were the amateur bars on Wednesday's activity. When we have an FOMC day, it's super volatile. The average trade size is really small, and the market's just whacked backwards and forwards. The tip bar chart for the Emini shows that in more detail. We'll talk about that in a second. You can see here on the better sine wave chart, we have our big things happen at triples, signal go off, and we've had a sign of strength from there as we're busting out above resistance at that point. And yep, we're going towards some cyclical resistance at some point here, but it's not signaled yet on the 135-minute chart. 45-minute chart, this is the next time frame down. There's our big things happen at triples, and that's the first sign of strength. After that, we're in an uptrend on the 45-minute chart. So the beginning of the week we rallied with Rambo patterns there, but the lows of those amateur bars never really got taken out. That was the Fed announcement day, a whole bunch of amateur bars backwards and forwards until we busted out of that. We've got an exhaustion buy and a bearish divergence pattern. That's pretty close to the zero line, so we'd probably look for a flush pattern before that starts to roll over, but we're still in an uptrend. The background's in red, so that means we're in an uptrend in terms of price and volume. and then down to the 15-minute chart, and this is where we show the beginning and the ends of the week with the solid vertical lines. You can see here it's the rally that we've had over the last 2 weeks, set up beautifully down here. Big pro bars, that's the bars are blue and the background's blue, meaning that these are professional bars and extra high average trade size. So big pro bars happening here. Exhaustion buy, getting the move going, sign of strength, bust into an uptrend with the background in red, so it's an uptrend in terms of price and volume, and nothing to show that we've got an exhaustion pattern here on better momentum at the moment. One little sign of weakness here on a better sine wave, but we're still in an uptrend. We've still got to figure out where this exhaustion pattern sets in, and possibly some big pro bars before this trend move is done on the upside. I've said this in the last couple of weeks, the 5800 level, pretty key. There's got to be some stops sitting above there at some point. I think those have got taken out possibly this week, so we'll see if this rally continues. And the tip bar chart, here we go for this week's activity. You can see all these amateur bars here during the Fed announcement, backwards and forwards. So at the beginning of the week we rallied into a Rambo pattern, and then we sold off and had a final Rambo pattern on Fed announcement day, and that's a Rambo to Rambo channel. Poor old amateurs going long at this point, getting stopped out when we reached the other side of the channel, and then coming down here, going short at that point, and then getting stopped out at the top of that range there. At these highs, interestingly, no blue professional bars, no exhaustion buy pattern here. We've got an exhaustion buy pattern come in and professional bars at the end of the week. We're in a downtrend, short little downtrend on the 13,500 tip bar chart. So that could weaken until we find support. Let's go to the better sine wave chart. Yeah, you can see a whole cluster of sign of weakness up here. We topped out in terms of better sine waves, so we could have some weakness early in the week before being caught at some point and then having a proper go again at 5800. So there we go, that's the E-mini. We're in an uptrend, but we could see a little bit of weakness early in the week and then have another go at 5800 and bust a whole bunch of stops, hopefully. Right, let's talk about the Forex charts first. So the euro rallied nicely down here at the end of last week. We had a nice signal, big pro bars coming here, sign of strength with the red arrows there. Wasn't an exhaustion sell pattern at that point, but we got going, and here's the volatility that we had on Fed announcement day, Rambo to Rambo channel. And at the moment we're in an uptrend. The background's in red here, the last one that we had. We're holding above our trailing stop on Better Pro-Am. We just need to bust out of here. We haven't had blue professional bars take profits at this point, so busting out of 12 and a quarter would be good. So I'll be looking for that this week. British pound, I think similar type position. So here's the big pro bars getting this move going, exhaustion buy, getting the move going. The sell-off that we've had has generated exhaustion sell at that point. It's showing that we're in a downtrend. The background's in grey, but we didn't see blue professional bars taking profits at these absolute highs here, so we could easily just bust through that point there and go get exhaustion buy on British pound. So I think we're in an uptrend on these Forex charts, and we might continue to rally there. Same thing Aussie dollar. I'm long Aussie dollar at the moment. We've got a Rambo to Rambo channel on the 18th with all that Fed announcement. Here's the big pro bars getting the move going, and one blue professional bar here at the highs taking profits. Bit of a stair-step trade here, but they stepped in at this point here with a U-turn, bang bang, and we're in an uptrend because the background's in red. So looking for that 68.5 level to be taken out in the Aussie dollar, generate exhaustion buy patterns before this whole move's over. So I think all of those are looking pretty strong. Japanese yen weakened this week, so big pro bars last weekend into a roll here, flush patterns, Rambo patterns on the Fed announcement day, and we've continued down. But here's some blue professional bars, exhaustion sell coming at the lows. It's not triggered into an uptrend yet on Japanese yen, but that'd be interesting if that develops this week. So 10-year notes, same thing, still in the downtrend. The last signals that we had were grey backgrounds, so it's looking weak, but we've got big pro bars starting to set up here. Exhaustion buy pattern was the last one that we had, and we've rolled over from there, so it's not ready to trigger yet on 10-year notes, but look for that this week. Gold's been doing pretty nicely. So here the last couple of weeks you can see bought the lows, big pro bars coming at the lows again, get the move going, and this one, big pro bars getting the move going at that point. We had a little bit of weakness on Fed announcement day here on the 18th. We sold off from there, but that wasn't enough. We've continued to rally past that. So gold ending the week pretty strong, no blue professional bars taking profits at that point there. Silver, I think silver's also doing nicely. Big pro bars getting the move going. We test back into that region there, and it holds. Amateur down bars testing, and we've rallied higher. No blue professional bars at the highs. Don't think that's top yet being made in silver. And Bitcoin did quite nicely this week. Rallied off 53s here, and we switched into an uptrend with the background in red. Didn't signal particularly down here with blue professional bars on those lows of 53, but they changed their mind at this point here on that little break. They came back in, exhaustion sell, bought that level, tested back into that level, it held, and we've kind of continued to rally on. So exhaustion buy at the moment, and an under the lip trade, just amateur bars under the lip at that point there, and weakening this weekend. So let's see if Bitcoin finds another area of support, maybe down here at around 61,000. Crude's had a nice week, so this was a nice setup 2 weeks ago. Exhaustion sell, bullish divergence, big pro bars coming at the lows down here, get the move going, test, and then sign of strength. Two of those come in, bang. Let's see it in terms of cyclical patterns, what was happening down here. There we go, sign of strength down there, bust into an uptrend. And at the moment, so crude, yeah, big pro bars coming in here at the highs, so that's interesting. No exhaustion buy at that point. So let's see if that little move, which has been quite healthy from 64 to 71 and a half, we're going to have some profit taking next week. Let's see if that happens. Natural gas strong this week, but ended up with big pro bars up here at 273, up at the highs. No exhaustion buy yet at that point. Let's see if that's profit taking. We start to weaken this week, natural gas. Copper, yeah, big pro bars getting that move going. Still continues to rally, no exhaustion buy, but it's interesting that it overshot that. See if that continues to hold or maybe rolls this week. And corn, super volatile last week and then moved into Rambo patterns, and exhaustion buy at that point has weakened, but we've come back down into that blue professional bars zone down here at 400. So let's see if that starts to hold. Soybeans seemingly topped out here midweek, big pro bars, exhaustion buy, bearish divergence, and we weakened from there, and we're just amateur up bars into this under the lip trade. So let's see if that weakens this week. And wheat topped out last week, big pro bars at those highs, we weakened from there. Amateur down bars at this point here, so let's see if that area holds and we break back up through 576 on wheat. So there we go, that was a quick rip through those futures charts. The E-mini is certainly looking interesting this week to take us through 5800, but the question is, are we going to have a little bit of weakness first on the 13,500 tip bar chart before that sets up for the next leg? So I hope your trading is going well, and looking forward to next week's trade.